Now, if you're a subscriber, a current subscriber, welcome back and thank you again for tuning in today. If you are someone that is tuning in for the first time, my name is Troyson Bassini. I am the owner and head of research of Life Buyers Agency. So we are a regional Queensland buyers agent specialist, and we service the Central Queensland and North Queensland property markets under these two brands here. So up in North Queensland, we've got Tropical Life servicing Cairns, Townsville, and the broader region there. And then we've got Capricorn Life servicing the Central Queensland basin from Rockhampton to Bundaberg and everywhere in between there as well, Gladstone and Mackay included. And what we do is we generally help a lot of investors and geographically challenged buyers navigate these markets. We're on the ground, we provide buyers advocacy services, purchase, negotiation, acquisition, and pre and post settlement support for anyone looking at potentially buying in any of these locations. We've done more than $250 million worth of transactions in these regions. 70% of our purchases are off market, and I like to say, as a result of buying off market, a lot of our properties are also bought in isolation of competition and under market value as well. So if you feel as though you are an investor that might need potential professional help getting into these markets, feel free to reach out to us on those websites below or give us a call on that number and we can connect you up with myself or one of my team members for a chat around how we might be able to potentially get you into the market and buy you a cracking investment. Now, as part of these updates today, I'm going to be taking a sort of a high-level look or snapshot of each of those different regional hubs I mentioned before, starting with Bundaberg. So we're going to have a look at its median house price, look at some of the demand and supply side data around days on market, stock levels, inventory levels. We're going to be looking at listing volumes, and then we're going to be looking at the rental side of the market around vacancy rates and how the rental market has been tracking. So there's enough here in terms of a high level snapshot, I believe, for you to figure out, all right, if this is the ideal time to buy or potentially sit on the sideline. So let's dive in to Bundaberg now and see what's going on in this market. So Bundaberg, Bundaberg has grown a lot over the last, 4 years. Since COVID, it's had a massive spike, and then it kind of went off the radar for a lot of big buyers agencies and a lot of investors. It kind of faded away as an investment hotspot. So it hasn't necessarily been a market that's popped up a lot on various property forums, but I know Bundaberg is still a location that I think has plenty of upside. And I know people are still potentially interested in Bundaberg. They just want to understand what's going on there currently. So from a snapshot point of view for Bundaberg, we can see here right now its median house price is $591,000. Now, in comparison to all of the other regional Queensland hubs, I would say that's probably one of the more expensive markets. It's definitely up there. I'd probably say the only one it's not as expensive as right now is Cairns. So I'd say Bundaberg would almost be second on the list today as the most expensive regional hub. So Bundaberg has around over 100,000 people and a massive agricultural economy there. So it is a big market and has been very popular as well for a lot of people moving intra-regionally from the Sunshine Coast and the Gold Coast, coming up to places like Bargara, Ince Park, Corals Cove on the east coast of Bundaberg, and then in and around sort of the established parts of Bundaberg, that affordable price range between 400 to 550. I know a lot of investors have smashed that of late as well. So yeah, Bundaberg, guys, from a median house price point of view, still looking pretty affordable, I'd say, in the grand scheme of things, particularly when you start to benchmark that against capital cities. So let's have a look at how its median house price has performed year to date. So since January to this point in time, today in September. So we can see here that year to date, the median house price has grown by 8.2%. So very close to double-digit growth here so far this year. From 546,000 to now 591,000, accounting for total growth this year of $45,000. So yeah, you can see $45,000 this year in terms of growth year to date, so 8.2%. So Bundaberg is definitely a market, guys, here that's still very much on the rise. So I know it fell off the radar of a lot of investors and big buyers agents as a hotspot, but as you can see here, it is still a market with plenty of growth happening there today. And I think a lot of the growth is happening still around a lot of the affordable areas like Avenel Heights, Kepnock, the Beeben, Avoca, a lot of around that 450 to 550. I still think there's a lot of good value if you can pick up properties for in that price point. I think a lot of that could jump, an extra 50, 60, 70, $80,000 in the short term as well. And I know on the east coast of Bundaberg right now, supply is in very short supply. So Bargara, Innes Park, Coral Cove, everything basically there right now. It's very hard to get anything under 650, and I know a lot of the stock that is over 700 and above are also selling very fast. So there is a lot of interest still in Bundaberg here, guys, hence why I think that median house price has surged along this year quite well, and I think it's going to continue to surge along quite nicely. And if we actually look at some of the data here now, I think it's certainly going to reflect that. So we can see here that the days on market currently has maintained its trend of 53 since January. So it's not a complete frenzy out there like where it was around 30 days when it was red hot around that COVID period. So 50 days means that most things are going under contract there within sort of the first 2 weeks, not necessarily in the first day. But again, this is on a case-by-case basis, guys. You have to remember that there are certain properties that will go to market that might go under contract straight away. So don't sit on your heels too much if you are an investor there. Just tread with caution, because there was a property today that I looked at that's on the market in Bundaberg right now in Walkerville with Michael Loader for offers over, I think he had 399, and he went up online yesterday, and I texted him today, say, hey mate, how's that tracking? And he said there's 7 offers on it already within the first couple of days. So on a case-by-case basis, things are moving very fast. So don't just be mindful of that if you are looking to buy in Bundy. You can see the stock levels are sitting at 0.2%, which is extremely tight, right, in terms of overall supply, and the inventory levels are currently sitting at 1 month. So that's really, really tight, guys, for a market with a population of over 100,000 people with more than 40,000 unique dwellings within the immediate area. To only have 0.2% of supply coming into the market is very, very low. So that low supply with high demand obviously creates that imbalance between supply and demand, and that causes that house price friction, right, in the marketplace. So naturally prices have to continue to rise when there's only 2 properties coming up in a suburb and then there's 20 buyers, right? So there's a mismatch between the two there. So stock levels are low, inventory levels are low. So from an investment point of view, if you are looking to invest in someone like Bundaberg, like the data is looking very good so far with its growth rate, days on market quite low still, and stock levels very tight. We can see here that listings have increased increased 34% from 117 in January to 157 in September. So believe it's maintained all year around that sort of 130, 120 mark throughout the year, and then it's had a small spike here in September. This naturally happens during the sort of the spring selling season as well, so that's definitely happened here in Bundaberg. Obviously, you want to see listing volumes get smaller and smaller and contract over time, and it's definitely contracted over the last couple of years now, but now I think it sort of idles between sort of low 100s to mid 100s, and I haven't really seen it hit 200 yet. But if this trend continues to rise, we might be in an environment where more and more stock is potentially coming to the market, and that could potentially slow down that growth rate as well. So we have to keep an eye on that. But overall, like, that's not a massive concern with these increases between those 2 points in time, between January and September, increasing by 34%. As I said, it's pretty much average between 100 to 150 properties per month all year. If it starts to spike any more than 150 properties, if you watch this data closely over the next couple of months, then that's where I'll probably say you might potentially start to see a slowdown here as more and more supply comes to the market and meets that demand. That slows down that median house price growth there, guys. Now on the rental side, we can see here that The year-to-date rent has increased 4.9% from $442 to $664 per week. So the rental market is still certainly growing here, guys. And from a median rent point of view, currently sitting at 464, I think that's quite strong as well. And obviously, this is the median overall in the suburb, in the town of Bundaberg. Sorry, but individual suburbs will definitely have higher than the median rents. Like I purchased a property in Thabebin this month, a 4-bedroom, 2-bathroom brick home on 600 square meters, built in the last 20 years, and that's renting for $580 per week. So on a case by case basis and a suburb by suburb basis, you'll be getting opportunities that outperform this overall median. But again, that's still pretty good to see that the overall rental market is growing, and that growth is probably reflective on what's happening on the vacancy rate side of things as well, which we'll take a look at in a sec. But yeah, guys, rents are growing, property prices are growing, so it's starting to really tick those two boxes for me here in Bundaberg. And the vacancy rates we can see here. So the vacancy rate's currently sitting at 0.9%. So that vacancy rate, very tight, sitting under 1%. And that's obviously putting upward pressure on rents as well. So you wonder why rents are growing? That's exactly why there. If you want to know the reason why, it's because that vacancy rate is very, very low. And look, guys, in order for a vacancy rate to spike as well, so if you are someone that's keeping an eye on the data and you're concerned about vacancy rates potentially spiking in the future, the only thing that can potentially spike this vacancy rate going forward is a whole bunch of new supply to come to the market. I'm talking about new development like house and land packages, new apartments, townhouses, new construction that could come in and add new stock to the marketplace that's available for rent. But unfortunately, with Bundaberg, the building approvals of late as well haven't been as strong, and like most parts of the country, construction is slow, construction is pricey, and not a lot of people moving down that path. So I expect this vacancy rate to continue to remain under 1% for quite some time, and I think as a result of that, that's going to continue to put upward pressure on that rental market there to push those median rental prices up going forward in the short term, definitely in the next couple of years as well. So if you are looking at potentially investing in Bundaberg, guys, the median house price is growing, supply is low, demand is high, so that's good for short-term capital growth going forward. And then on the rental market, we have a low vacancy rate environment with growing rents also with very little supply. So Bundaberg is still looking like a pretty good market to invest in right now, guys, based on all of this point in time data right now.